Do you know when the IMF offers a loan of a few hundred million, it basically asks the receiving countries to make policies as the IMF orders? In other words, the loan is only given when the country agrees to follow all policies made by the IMF. And the IMF means the West. But what do countries get when they become a member of BRICS? Well, they get the easiest loans of billions so their economy can grow. There is no blackmailing involved, as is the case with the Western financial institutions. For this very purpose, the BRICS established the New Development Bank. Just recently, this BRICS bank offered a South African state-owned company called Transnet a loan of 5 billion South African rand. Why was this loan offered, how South Africa will use it, and how this BRICS bank can replace Western financial institutions like the IMF and World Bank? In this video, let's find out. So, what has happened? Well, the BRICS has claimed its first victory as being an alternative to the Western dominant financial and lending system. Just recently, Transnet, which is South Africa's state-owned logistics company, received a crucial 5 billion rand loan, which is approximately $283.53 million from the BRICS New Development Bank, NDB. And this changes everything. Until now, countries have been dependent on Western institutions like the IMF and World Bank, but not anymore. The South African government has guaranteed this loan, which comes at a vital time as Transnet seeks to overcome a long history of financial struggles. South Africa could go to the IMF, but it had to accept the policies that would have been against the company but would have benefited the IMF. But what is Transnet in the first place, and why did it need a loan? Transnet is a South African state-owned logistic company, and for years, it has been facing severe operational difficulties that have severely impacted its ability to provide reliable rail and port services. With a massive debt of around 130 billion rand, the company has been plagued by equipment shortages, aging infrastructure, and a backlog in maintenance. The consequences of these challenges have been far-reaching. Transnet's cargo volumes have sharply dropped from 226 million metric tons in the 2017 to 2018 financial year to just 150 million tons in 2022 to 2023. This decline has had a ripple effect on South Africa's economy, particularly affecting key sectors such as commodity exports, manufacturing, and retail. According to a study by the Gain Group, a consultancy that specializes in freight transport, Transnet's operational failures are costing the country approximately 1 billion rand in economic output each day. This loss amounts to about 4.9% of South Africa's annual GDP, or roughly 353 billion rand. But how did the BRICS New Development Bank get involved? The New Development Bank was established in 2015 by the BRICS countries to support infrastructure and sustainable development projects in emerging markets. Each of the BRICS nations contributed $2 billion to the bank's equity, ensuring that all members have equal ownership and influence. But today, the New Development Bank has a capital of $100 billion. When Transnet's position became critical to continue, the BRICS members decided to offer it a loan that could sustain its growth. Therefore, it was decided that 5 billion rands would be provided by the NDB to revitalize South Africa's cargo rail sector. The funds are reserved for several key projects, including the renewal of rail network infrastructure, overhauling locomotives, and upgrading wagon fleets. They would prove to be lifesavers. These modernization efforts are expected to increase freight rail volumes, improve operational efficiency, and enhance service reliability. Ultimately, these initiatives are designed to create a more sustainable and effective logistics sector in South Africa. But in what currency will be the loan provided? Well, it is one of the first loans issued in rand rather than dollars. This approach aligns with the NDB's strategic goal of conducting approximately 30% of its lending in local currencies. This shift helps reduce currency risk for the borrower and promotes economic stability by minimizing dependence on foreign exchange fluctuations. Also, it's an announcement by the BRICS Bank that gradually all loans and debt payments will be done in local currencies, ending the dollar's power in the BRICS alliance. As if replacing the IMF was not enough, the BRICS has now given this updated shock to the West. Here's a reminder to please like and share the video and subscribe to our channel to watch more videos on Africa's geopolitics, economy, and changing landscape. Let's continue now. So, can the BRICS new development bank replace IMF and World Bank? For decades, global finance has been largely controlled by institutions like the International Monetary Fund and the World Bank, which were established in the aftermath of World War II under the Bretton Woods Agreement. These organizations have been led primarily by Western nations and have often been criticized for promoting economic policies that benefit those countries the most. However, this Western dominance is increasingly being challenged by emerging economies. A prominent player in this shift is the New Development Bank, founded by the BRICS nations. The NDB offers a new approach to development finance that could serve as an alternative to the IMF and counteract policies that have been criticized for favoring Western interests. It's because now it's an open secret that the IMF and World Bank work only for the Western interests. These institutions are known for imposing strict conditions on borrowing countries, including austerity measures, privatization of public assets, and market liberalization. Such policies have often resulted in economic hardship, social unrest, and political instability in developing countries, while benefiting wealthier nations that wield the most power within these organizations. As a result, the influence and relevance of the IMF and World Bank have been waning. Countries are seeing how these institutions result in a perpetual cycle of dependency and a debt trap they can never get out of. On the other hand, developing nations are gaining more leverage and are starting to question the outdated rules that have long governed international economic relations. It is in this evolving global order that the NDB has emerged, presenting a financial model where all member countries have an equal say in decision-making, regardless of their economic strength. Interestingly, the NDB was established in response to widespread dissatisfaction with the governance structures of the IMF and World Bank. These institutions have long been criticized for being dominated by Western countries, particularly the United States and Europe, which hold the largest voting shares. This governance structure has historically allowed these nations to set the terms of economic assistance, often enforcing neoliberal reforms that have had negative social and economic impacts on borrowing countries in the global south. In contrast, the NDB was designed to be more inclusive and responsive to the needs of developing nations. It operates on a principle of equal shareholding, meaning all founding members, regardless of their economic power, have an equal vote in decision-making. This approach represents a significant shift from the IMF and World Bank's model, where voting power is linked to financial contributions. By ensuring that each member country has an equal voice, the NDB promotes a more democratic and balanced approach to global financial governance, reducing the chances of any one country or group of countries imposing their policies on others. The NDB focuses on financing sustainable development and infrastructure projects that align with the priorities of its member countries. Unlike the IMF and World Bank, which often attach stringent economic conditions to their loans, the NDB highlights country ownership of projects. This approach allows borrowing countries greater control over how funds are used, without being forced to adopt a one-size-fits-all economic strategy. This model respects the sovereignty of borrowing nations and allows them to follow development strategies made for their specific needs and circumstances. However, the IMF does the opposite. The IMF team comes and tells where every penny should be used, and only then the loan is given. But the NDB is different. It was not created to benefit itself but the members. And it has already proven its effectiveness in responding to global challenges. During the COVID-19 pandemic, the NDB provided over $9 billion in financing to support economic recovery programs in the BRICS countries. This financial support helped these nations manage the economic fallout from the pandemic and adjust to new post-pandemic realities. That's why the NDB's proactive approach has attracted interest from countries outside the BRICS group, leading to an expansion of its membership to include Bangladesh, Egypt, Uruguay, and the United Arab Emirates. One area where the NDB is well positioned to make a substantial impact is infrastructure investment. Traditional development banks, such as the World Bank, cannot often meet the growing demand for infrastructure investment, especially in developing countries. Experts estimate that the need for infrastructure investment in these countries ranges between $1 trillion and $2.3 trillion annually. The NDB, with its focus on infrastructure, aims to help fill this gap by providing the necessary funding for projects that are essential for economic growth and development. The NDB's strategy is also more aligned with current geopolitical realities. Unlike the World Bank and IMF, which were established in a period dominated by the United States, Japan, and European countries, the NDB reflects a more multipolar world where emerging economies play a larger role. The NDB's focus on infrastructure investment is particularly relevant given the global push towards sustainable development and green projects. As a result, the NDB represents a significant deviation from the economic policies traditionally associated with the IMF and World Bank. The NDB's model promotes partnership and equality, regardless of a country's economic size. This stands in contrast to the traditional model, where developed countries often have disproportionate influence and can impose their will on weaker nations. By providing an alternative source of funding, the NDB reduces the dependence of developing countries on the IMF and World Bank, giving them more freedom to choose development paths that best suit their needs. What do you think? Can the BRICS new development bank replace the IMF and offer loans without any strings attached? Isn't it true that the reason why the IMF and World Bank were established was to control countries by offering them loans? In the comments section right below, share your thoughts on the fact that the BRICS Bank is ending all IMF's monopolies and will soon be the choice of every country. Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: African politics, economy, and increasing power. Thanks for watching, and until the next video, stay tuned.
Tell us what you think in the comment section. Like and share the video, and subscribe so that you don't miss any of our African videos. It's the best way to support us.